So we know you are running a big assets company. Do you see that the gold could be one of the options for the insurance allocation, the assets, the management?
One of the leading or main principle to make investment is to make sure we can get out of this.
What kind of opportunities could emerge in the financial sector for global investors?
Technology, artificial intelligence, robots, healthcare, anything related to automation of the economy and more advanced technology will be the theme for the next wave, next cycle.
When we talk about family, about the family assets, people are more cautious right now because the real estate is one issue.
I still see at certain point apartments, real estate have the value. So they will buy some real estate to pass to the next generation.
So Mr. Benjamin Deng, and we know you are running a big assets company, and I think many people have asked you this question: what is your biggest challenge or pressure when you doing this kind of assets management?
I've been working at different companies, and each company has its own pressures and different characteristics.
What have you met the biggest one?
Well, the biggest one was how to allocate cash. In one of the companies I used to work for, we had a lot of cash and huge amount of money to allocate. Now I'm working for Sun Life. Sun Life has, our pressure is how to cope with changes in the global market because we are a 160-year-old history company, and we've been in Hong Kong for 133 years. We came to Hong Kong in 1892 when China was still in Qing Dynasty. Now we are caught in between in the geopolitics, in the development, the revival of China, the new technologies, the AI, healthcare, all of these changes, we're caught in between. Plus, China is going into a lower interest rate environment. US is cutting rates. How to satisfy, meet the demand from our policyholders, and how to make long-term investment return stable is a big challenge we have. And also the growth of Southeast Asian economies presents opportunities, great opportunities, and more investment channels that we face. So how to make sure we have the capabilities and capacity to take advantage of these opportunities. That's another challenge.
Kind of assets management company, they're also focusing on the safe haven assets, and now we have seen that the price of the gold is going up and a little bit down for some times, but the trend is still going up because we have a weak US dollar, and previously for Japanese yen is not that stable right now. So because previously a lot of assets they would to buy the Japanese bonds to have this kind of risk management. So facing all these kind of risks, what would be your top concern as an asset company and also as a leading company in the industry of insurance?
Yeah, our ambition is to be the best asset management company and insurance company in the world, Sun Life. And the number one principle we follow is to match our assets with our liabilities. So in terms of that, matching comes with currency matching, cash flow matching, liquidity matching, yield matching, all of these. So if you talk about, it's really a great topic to talk about stability in returns. How to get stability in returns? Get bonds. So we have a large allocation to bonds with steady cash flows. There are equity elements in our allocation. How to manage equity portfolio with stability in return? The biggest secret is a well-known secret is to diversify risk. So we don't focus on concentrating in one market. We diversify into US stocks, China stocks, ASEAN stocks, Japan, India. India is a growing market as well. So with the diversification, we can achieve lower volatility, higher Sharpe ratio. You talked about gold, right? You talked about gold.
Yeah, do you see the gold could be one of the options for the insurance allocation, the assets, the management?
Right. For investments, long-term investor, we invest. One of the leading or main principle to make investment is to make sure we can get out of this. So oftentimes I say, if you don't know how to exit, don't invest. And so if talking about gold, right? In the past couple of days, we've seen large volatilities. Typically, when you look at financial instruments, you will do cash flow discounting.
Yeah.
Like you know what the yields are, what the incomes are, and you discount with your discount.
A lot of calculations.
Yeah, it's based on your risk appetite, based on the tenor of investments, based on the stability of the cash flow or predictability of cash flow. Then you make investments. Plus, you know how you can sell the instrument. If you can sell the bond in the market, sell the stock in the market. Okay, here comes the question. If there's a asset that is really popular, but there's a risk that at one day we cannot get out of this. There's no liquidity. And or at a certain time, everybody's selling, like back in the 2008 financial crisis. That's a big risk we experienced in the past. And that gives us the warning that we should be very cautious about these kind of assets, which we don't see cash flow. We don't know what cash flow looks like. And there could be a time we cannot get out of this.
So gold could be one of these options on this part.
Right. So in that concept, if gold is not something we can physically, we got to be very cautious about physically owning gold because you don't know how to trade that.
And you also need a lot of investments in the security.
You can have stocks like gold mining stocks,
okay,
right? So bonds related to that industry. Those are kind of the instruments we can look into.
Actually, diversifying the risk and all the risk management has been a key part for the industry and for your the insurance and also asset management, and not just new words in the geopolitical perspective, but now everybody is talking about risk and risk management, and also we are facing a lot of the tariff wars, and they have made a lot of assets are the ups and downs of the price. So what would be the emerging economies for the opportunities for the investors, especially in the Asia Pacific region right now?
So for emerging markets, one of the best ways to diversify risk is to invest globally. For instance, in our Philippines business, the policies could be dollar denominated, could be Philippine peso denominated. But on the equity allocation, we can allocate certain part of the investments into global assets. So that will give our portfolio an advantage of taking more diversified risk.
So you have more capacity to counter those kind of risk.
Exactly. The background, the prerequisite for that investment is, number one, we have to have a capability and a capacity in making global investments, which we do. Sun Life has 1.5 trillion Canadian dollar in total AUM globally. So we have large, very deep capability in managing global assets. So that's why we can do that. Capability is one. Understanding of global macro and the geopolitics is another one. So we've been around for 160 years. Really, I do a lot of history study. If you look at today's volatility or geopolitics or all of these big power struggle, it's new in the format, but it's not new in logics. It has happened 3,000 years ago, happened 2,000 years ago, happened a few hundred years ago.
Similar situations in history.
You will draw a lot of similarity and common themes in history. And in terms of macroeconomic policies, none of the policies we face today in the overarching logic is new. We've seen that before. I personally studied China's monetary policy in 260 years in the West Han Dynasty. And you will see that cyclicality in the monetary and the fiscal policy. Same thing. This happened in history many times. So if we have the luxury or advantage of taking long-term view on investments, we can learn from history and know where we are in that cycle and predict where we will be in the next cycle. And then you gain confidence and a stability, and you don't have knee-jerk reaction to certain things. So a typical knee-jerk reaction would be gold going up to $40 to $100 per ounce, and people rush in to buy. And when gold go down to $4,000 per ounce, people rush in to sell. That pro-cyclicality, that's a typical knee-jerk reaction. But for long-term investors, when we look into bonds, yields, equities, we're typically counter-cyclical. And because we have the confidence, sitting here in China, we have the confidence in the resilience of the economy of this country. So it's not going to go straight line down or straight line up. It's cyclicality. So we know where we are, and we can counter that cyclicality and make educated investments.
So actually, when you're focusing on one market, especially for the China now, the financing sector is opening up to more global investors. And actually, we have raised this sentence for multiple times. That China is further opening up in the financial sector, especially in the insurance and also assets management part, has created a lot of opportunities for global investors. But we would like to know what are the specific opportunities has emerged and what could be expected.
So I read the conclusion announcement from the big meeting, the conference, party conference, technology. So we can easily draw some conclusions. The thematics are technology, artificial intelligence, robots, healthcare, anything related to automation of the economy and more advanced technology will be the theme for the next wave, next cycle. Talking about cycle, we know we have different kind of economic cycles: the kitchen cycle, the jugular cycle, and the counter GF cycle. We are at the transition period of a new counter GF cycle, meaning it's a technological change, revolution. We have just came out of the combustion engine period and coming into the new information technologies, artificial intelligence, and revolutions in energy, revolutions in healthcare, in biotech. So we will
go like a combination of all these kind of revolutions, unless the not just like the 1990s, they have the internet revolution.
Right.
That at that time there was only one revolution.
That's precisely true. And the past 30 years, we've seen a automobile being the drive, the combustion engine being the driving force, and that drove the consumption of traditional energy, fossil fuels, and natural gas, and that drove really gave birth to the new technology like computer. When I was younger, back in 1980s, to open my personal computer, I got my first PC back in 1983, I think, maybe 84. To turn it on, it took 15 minutes. And back in 1995, to go online would take me two minutes, because you have to dial in a phone number and hear that sound, and it takes 2 minutes to get online. Now, it's instant, right? Instantaneous. So that gradual accumulation of capacity and plus sufficient provision of energy, and it gives the condition for an explosion of revolutionary technologies. So we will see exponentially these technology will explode in the next 10 to 20 years. So yeah, we are in a big change period. And
so about the opportunities, because for the assets management, when you're focusing the market and you like to select a specific industry to invest, and as we have focused for the next 5 years, and we will have the more high-tech driven economy growth, and also to boost the domestic consumption. What kind of opportunities could emerge in the financial sector for global investors?
Investing in technology, in robots, in healthcare. Before this interview, I was talking to a friend who is a bioscientist. He graduated from NYU. He's a PhD. He was a scientist in the US. He came back to China to develop new drugs. The technological jargon, scientific jargons he talked about, I have no idea because I'm a finance guy. But I could see revolution is coming. Like with the new things, the cure to cure cancer, to cure Alzheimer, cure Parkinson, will all come. I think I see that big expectation, big hope. The revolution will come in the next a few years' time, I think. And so we have a lot of tremendous opportunity. But I want to sort of put some caution in this topic. are we going to see a big bubble like
For the internet bubble economy
Right.
in the US
Yeah.
at that time?
I think not. I don't think in the next 10 to 15 years we will see another bubble like what we saw in the past 10 years, 20 years, because regulators are more educated about economic cycle, about economic risk management, and these very diversified technological revolutions and innovations is, again, the word is diversification. They're everywhere, but there's no concentration. Going back to real estate bubble or IT bubble, dot-com bubble, it's pretty concentrated in the industry. It's one theme, right? But we're going to have multiple fronts being innovated.
And they're also interconnected.
They're also interconnected. So the correlation is there, and also the diversification is there. So I'm going to see, I think we will see a healthier growth in the capital market. But you will not get rich overnight. So, we had a time when people bought an apartment or house over a month, over 2 months, they got rich, right? So that time is
not in that age, right?
We're not in that time anymore. And I don't know, maybe 30 years down the road, there will be another bubble. That's going to be beyond me. I don't know.
So that's why a lot of people say we need to be healthier and to live longer, because you don't know what will happen, and because the technology has evolved so quickly. And as you mentioned a lot about the AI and also these kind of high-tech industries. And actually for most of the people here in China and also other emerging economies, when we talk about the family assets, people are more cautious right now, because the real estate is one issue, and also people would like to save more for their future, and also they would like to find some opportunities.
Right.
So, and we know you are managing a huge portion of the financial assets, but for the household assets management, what would be your advice, especially for the young generations?
Right. At different stage of life, you will face different pressure, right? So when people are young, they face pressures like having kids, raising a family, maybe buying the first apartment. But now we're seeing, a different dynamic. 20 years ago, young people would want to buy a first apartment in Shanghai, Beijing, Shenzhen, Guangzhou. Now their parents actually have the new economy, the new technologies enable people to work remotely. And you'll see third-tier cities, fourth-tier cities, they have the new economy formats. Right? So some people actually returned back to their hometown. In their hometowns, they have houses or apartments. So I think the demand for apartments, the nature is changing.
It's just remain limited.
Yeah, it will be somewhat limited. Same thing's happening in the US. Young people are not buying houses. Young people they get married, they buy smaller apartments, they rent. So the rental business in the multi-house, buildings and the apartment buildings, that has become a new trend in real estate investments.
Okay, so that could be one of the opportunities for the household management of assets. So
yeah, it's the mobility of people, mobility provided by technology, and a new style of living. Young people don't want to be burdened by a lot of mortgages, loans, or so that's in the first phase of life. But when they get to middle age, kids are in middle school, and they want stable jobs, they want to accumulate wealth,
and also for the tuitions for their kids,
for the future tuition of kids, then they want to make some long-term investments. Of course, an apartment, a housing will be a need, right? Eventually, you will need a place for the family to stay. Then, long-term savings. Here comes two kinds of long-term savings. One is like in their lifetime, in the next 30 years, they want some long-term. That's a sort of medium long-term savings, and then wealth being passed to the next generation. So that's the planning stage. Really, the long term for the next 30 to 40 years, I would say insurance policy is something. And we, And also buying wealth management products, like with long-term cash flows is one.
Because the interest rates will be a little bit higher than savings.
Right. And with money printing globally, I still see at certain point, apartments, real estate have the value. So they will buy some real estate to pass to the next generation, especially in a prime location, Shanghai and Beijing. That's not avoidable. It's part of the human nature. People gather into cities and become urban dwellers, right? So that's a nature of people's tendency to choose a style of life. So I would say buying some insurance policy and wealth management products is for their the wealth accumulation in their lifetime, and then some real estate, some physical long-term assets for the next generation. So these are the two things when people can get into their early 40s, late 30s, early 40s, they're going to start to think about these things.
So we need some more efforts for the asset management, because now we are in the best of the time, we're also in the worst of the time.
Yes.
But we hope we can have a more brighter developments in the coming days.
Yes, I'm very positive. Being an investor and a long-term investor, you will never find a day that is dull. Every day has challenges, and we had challenges back 2008 global financial crisis. We had a big challenge in 1997 Asian financial crisis. 2000 was dot-com bubble burst, and then we go into 2015. We had the 2020 and war, and it's never dull. Every day is exciting, but every day there are opportunities, and it requires us to be vigilant and to be very agile in terms of seizing that opportunity.